Today we're going to talk about inflation, specifically how investors can protect their investments from inflation. But before we talk about how investors can protect their investments, we're going to define inflation. Well, inflation is the increase in prices over time, which leads to the decrease in the buying power of your money. So, for example, in year one, you have $2 and you use that to buy a loaf of bread. In year two, you go back to that same store with that same $2 and you go to buy that loaf of bread, and now you realize that the cost of a loaf of bread is $2.20. The purchasing power of your $2 no longer gets you that bread, and the price has just increased. You have just experienced inflation. And if you have been going to the grocery stores, you will see that that's not too far off from the reality we have today. So how do we protect ourselves from inflation? Well, one thing you can consider to do is to have dividends. Specifically, you could have it as stocks, or you could have dividends in the form of a portfolio and have that be part of a well-diversified portfolio. And the benefit of dividends is that dividends are portions of a company's profit that's paid out to the shareholders, and it's paid either as cash or stock, and it's usually paid out quarterly, but depends on the company. And you might be asking, okay, well, how does this protect me from inflation? Well, dividends, depending on the company you're with, will provide some consistent income, and that income, especially if it's a high enough income, will offset the impact of inflation, will offset the fact that your purchasing dollar is decreasing each year. And if that dividend is sufficient and it's consistent, then potentially what you have is the opportunity to have a fund or a stock that exceeds inflation over time. Additionally, dividends historically have been shown through research from RBC Capital Markets quantitative research that it provides lower market volatility, right? So when the markets are down, because of the consistent dividends that are paid out, it protects your fund, it protects your portfolio. Here's another beautiful thing. We have the downside protection, we have the upside growth. That same research from RBC Capital Markets also indicate that historical data suggests that dividend-paying companies have offered higher returns over time, right? So it has downside protection with opportunity for higher returns, which is huge. And if you consider it, right, if you have a stock, or if you have a fund that's providing you with dividends, then those dividends are used to purchase additional shares, and over time those additional shares, if they're increasing, starts to compound, and as they grow they then give dividends, and those dividends purchase more shares, which increases, and if it increases, pays more dividends. And I think you get the sense of what I'm saying here. And over time, if the dividends are where they should be, then there's an opportunity to potentially outpace inflation. No, there's always two sides to a coin, right? So you might be saying, okay, great, what are the downsides? Well, here's some potential disadvantages. High inflation can lead to reduced dividends if the companies want to conserve cash, right? And then also some high dividend sectors may lag behind rising prices, right? So if the prices are higher than the dividend payout, then it doesn't quite work. So that's one thing. The other thing is dividends funds performance against inflation may depend on the sector, or the focus, or the geographic investment area. Meaning, if you have dividends in a particular area and that area is hit pretty hard from a market standpoint, then the company may decide not to pay out any type of dividends. So you might be saying, Anthony, okay, what do we do with all this information? Well, it just means that it's not a situation where you could just pick any stock and any fund. You have to do your research. All right. So what you want to do is look at a fund where the portfolio manager has showed, indicated what their style is, and has some historical evidence to back that up. And at least consider that and do your own research if you're doing it by yourself. But, at least you're going with your eyes open. But the opportunity when it works is that you have a fund that has dividends, or you may have individual stocks that provide you with enough dividends that exceeds inflation. And again, it's not a one size fit all. Do your research, speak with a professional. And again, this is part of a diversified portfolio. Hopefully this was helpful. If you found it helpful, like, share, and subscribe. Thank you.